Guys, welcome everybody to Chart Addicts. If this is your first time with us, welcome. I know we don't have too many people on this call, which is actually going to be good. So if you guys have any questions, just feel free to ask. All right, main purpose of this call, guys, I'm going to go over charts after. So those of you guys that are on the call, I'm going to give you guys some free trades. So congratulate yourself. But a lot of people have been disregarding fundamentals, and I think it's something that is one of the most important parts of trading, and that people are just completely disregarding it. I know a lot of people love to look at charts, and most people are technical traders. But being a technical trader is not enough, guys. You're going to get blindsided by a lot of things. Okay, so for example, this entire week was a huge news week. So for huge news weeks, guys, you could have a directional bias based on technicals, and then all of a sudden you get sideswiped by a fundamental news event that happens that just spikes the market in one direction or another. All right, that's why it's really important to know what's happening.
Okay, maybe if I'm going home, let me ask something, please.
All right, so it's really important to know what's happening, guys. So the few things I'm going to give you guys on this call is tips and tricks for how you guys can start implementing fundamental analysis without having to do any extra work. All right, so I know a lot of people think, oh man, I got to keep up with the news now, as if trading technicals wasn't hard enough. What I want you guys to understand is that the technical analysis is nothing more than let's say it's a representation of what's happening in the real world. So if the real world is doing really well, if a certain country releases some really good news, then it shows up on the charts, not the other way around. So if you know what's happening fundamentally with the news, then you're not going to get surprised as often. Does that make sense? I really can't imagine what trading without fundamental news would be like, guys, because I really feel like people are just like seeing a setup and they're just taking the setup. And that works, I guess, over a long period of time if your risk and reward is really good. But if you're just starting out, or you're a moderate trader, or you don't really have the most strict risk and reward strategy, guys, that doesn't work. Because you could be seeing a buy on euro, but now they're having a stimulus package that they're releasing to print money, but also Trump just put tariffs on them. These are two huge factors, guys. If those aren't good for the economy, I don't know what is. And so if the tariffs are also bad for the economy, now we're in a stalemate. So nobody can really tell you what's happening in the markets when there's these kinds of news events, because the people who are running these news events like Trump and the European Union, they're still figuring it out. So how are we supposed to know what's going to happen in the markets if they're still figuring it out? So always keep in mind, guys, the people that move the markets are investors, and the investors react to the news first. So they hear something, Trump, he puts sanctions on the European Union. That means the European Union is no longer going to be good for them to put their money in for anything that has to do with manufacturing. And so you can see maybe a loss in the euro and a gain in the dollar. So when you're trading technicals and you don't pay attention to that, it just seems accidental. Bro, euro is spiking right now. Bro, check the chat. Euro is blowing up. Damn, bro. Or damn, bro, what happened? It hit my stop loss in like 10 minutes. Guys, if you look a little bit deeper, there's actually a reason for all these events. Now, you might not be able to pinpoint every individual reason. The Forex market is so big that it's hard to tell which move caused what. But sometimes when the move is immediately after a news event, you can actually pinpoint, okay, this price movement was associated with this news event. Trump tweeting, for example, there's a direct correlation between those events. All right. I don't want this to confuse you more. If you guys are lost in your trading journey, or you're just trying to get better, you're trying to become like the best trader you know, learn the news. Because if you're working at a professional firm, the guys who are moving this price, they're watching the news. They're not just technical analysts. Now, they have two different kinds of traders at a firm. So just so you guys know what's happening behind the scenes. Let's say you're a trader at Goldman Sachs. They have a technical analysis like desks where there's technical analysts, then they have traders, actual traders. And then there's analysts. So there's technical analysts, fundamental analysts, and obviously they have algorithms for all of this now. But there's two different people. So one of them is scanning the news, the market news, to be like, okay, Trump did this over here, so it's likely that, a lot of jobs in America is good. When everyone in America has a job, that means everyone has money to spend. And when everyone has money to spend, we go shopping. And when we go shopping, those stores, they then give that tax to the government. And the government has more money. So we look at this employment number very heavily. If everyone has a job, that's good for the economy. When something is good for the economy, you're going to see that currency go up. Okay? If that country is thriving, then investors are going to want to move their money to that country. This is how you guys have to start thinking about the markets. This is how you go from being a follower to thinking for yourself. Think for yourself in the markets, guys, and you'll never need to rely on any signal service. Okay? At ChartAddicts, we don't even provide a signal service. We provide signals as a service, but we are not a signal service. Okay, the majority of us is one-on-one coaching with people trying to get them to stop over-leveraging their account. Plain and simple. The biggest problem that we find in trading is that people are just getting sideswiped all the time by news events that they don't watch. They're over-leveraging their account or they're over-trading. It does not get more complicated than that. All right, so our main purpose is not to just not to just provide you guys signals, because that's the smallest part of the equation. Learn the other parts and you'll become a good trader. Okay, let's go back to the full picture of how the economy works, guys. I'm going to start you guys up at the very, very beginning. This is not going to go longer than 5 minutes. If I can sum up how the entire global economy works in 5 minutes, first, it's going to be impressive, but second, it's going to show you guys how simple it actually works. All right, and hopefully I can do it in less than 5 minutes. Let's see if I can sum this up. The whole world runs like this. There's private banks. Well, let's talk about the Forex world. The Forex world is the biggest players in the game are commercial banks. So that would include Deutsche Bank, BB&T, I think Bank of Switzerland. It would include JP Morgan. These big banks make up half of the Forex market. They got huge money invested in this. And so if they're the ones that are moving the price, this is how I think about it. If they have the majority of the market, they're the ones who move price. Them, pension funds, the pension funds are next, but it'd be pension funds, insurance companies, endowments, hedge funds, and corporations. At the very, very, very bottom is retail traders. Our money barely moves the market. If our money doesn't move the market, why would you listen and why would you base your opinion and your decisions on what other retail traders are doing? Guys, put a 1 in the chat if you guys are starting to get what I'm getting at. You go in these Telegram chats and you're getting advice from people who are retail trading. The retail traders have the smallest volume, and they also, only 7% of retail traders are profitable at the end of the year. So wouldn't you rather trade like institutions rather than retail traders? Okay, there's 2 types of ways to trade. You can trade like a retail trader, which is you study the chart patterns on YouTube, and you study all the chart patterns, and you study the Fibonacci's, and you trade just like everyone else. You're in the Telegram chat, someone says EU, you buy EU. Or do you actually are you thinking with the market? Are you thinking like the institutions? The institutions sit back, and believe it or not, guys, I know they're trying to hit your stop loss one way or another. Because here's the difference between an institutional trader and us. Us, we can buy and sell a trade instantly. I go on my phone, I hit buy and sell, I'm in the trade. A professional institution, guys, they can't just buy and sell. If they have $1 billion order, they need to send it over to Europe so they can do a middleman deal. They need somebody to take the other side of that trade. And if they can't find anyone to take the other side of that trade, they can't execute their order. Okay, so what they'll do is they'll actually hit your stop loss so they can get enough money to make that trade happen. So what you have to start thinking is, before you take a trade, be like, am I trading like a retail trader or like a fundamental institution? Because if you're trading like institutions, you're reacting to price and you're reacting to news and you're watching the news carefully. Guys, when I say news, I'm not talking about mainstream news sources. I'm not talking about going to your CNNs and your Fox News and your CNNBCs. I'm talking about going to your Forex news, Forex Factory. I'll show you a few websites if you guys if you guys make it to the end of this call. I'll show you guys a few websites that you guys can use. But if you keep up with that news, guys, you'll be in way better shape. All right. So, we covered why technical analysis is not enough, why you need fundamental analysis, and now we're covering the picture. Okay. Let's go back to the picture of how the money works. They are the biggest players in the market. We want to trade like the institutions. Boom. So how can you tell when the price of a currency is going to go up or down based on the news? Just think logically, guys. Okay. I'm going to ask you guys a set of questions. I'm going to ask them very simply. Put 1 or 2, depending on what your answer is. If everyone in the country has a job, okay, and more people are getting jobs every day, is that good for the economy or bad for the economy? All right, put in the chat, good or bad. If everyone's having a job, there's new jobs being created. Is that good or bad for the economy? I don't want you guys to think that you're too good for this. Answer this on the bottom. If you guys get this shit down to the point where it's like, all right, right, get this. Then you will have actually mastered this concept. All right, everyone in the chat, I see them. They're saying good. If everyone has a job, that's good for the economy. Let's say you have a job. You can take this money and go buy groceries. The grocery store takes this money. They have to pay taxes to the government. The government takes that money, and now we have money to build things, build infrastructure, and invest in our central bank and stuff like that. So people having jobs is good. Okay, let me ask you guys another question. We borrow money from the bank to get cars and to get houses and to start businesses. When you go to the bank to borrow this money, it's never free. You can't just ask someone for $10,000 and then you have to give them back 10,000. They're always going to charge you a little bit on top. It's called interest. It's the price of money. So if someone is charging you, like you borrow 10,000, you have to give them back 12,000. So you guys understand interest rates, right? If the interest rate is getting lower, like money is getting cheaper, is that good for the economy or bad? So if I can go to the bank and borrow money for cheap, like for very cheap, is that good for the economy or bad? Oh, people are saying bad. Dale said good. That's what's up. Guys, okay, you go to the bank and you're trying to borrow money for a house. Do you want the cheapest possible amount to pay back, or do you guys want a more expensive amount? You want the cheapest possible amount, guys. Okay, you want the cheapest amount. Let me explain why. If I go, let's say I want to borrow $10 and they want to charge me $2 on top. Okay, that's $12 total. So now my house is, or let's say like the candy I'm trying to buy or whatever is now $12. If I go to another bank and they're like, hey, you only have to pay us $1, so it's 11. I'm gonna go to the bank that's cheaper because I can borrow the money for cheaper. When people borrow money, then they can go start businesses. They can go buy houses from the bank and they can go buy cars. When you go buy cars, that company can take the money from the taxes and give it to the government. When you go buy a house, the bank can take that money and go give it to the government in taxes. When you go start a business, you're creating jobs and more people have jobs. So the more people that borrow money is called debt. The more people that borrow safe debt at a low rate, it's better for the economy. Does that make sense, guys? Put a 1 if that's starting to make sense. This is probably the most important concept in finance or in finance. You pretty much, it's like people have money and people have ideas. The people that are holding all the money just got to dish it out. They just got to dish it out to people who can create opportunity, and then we pay them back interest. Okay? That's pretty much how the world works. And so if you wanted to go start a business and you didn't have the money, you'd have to go to a bank and ask for a loan. At least this is how it works in America and most free countries, most capitalistic countries. You go to the bank and you get a loan, so the cheaper amount, the better. So when the central bank rate, guys, when we're trading Forex, and you guys see that Canada is releasing interest rate news or something, what that means is that is the rate that the central bank of that country is going to be charging the small banks. So if it's more expensive for the small banks to borrow money from the central bank, then they're going to charge us more money. Does that make sense? Like if the central bank rate is high, then all the commercial banks have to pay more to borrow money. They're not happy because then they'll just charge us more as the customer. That means when I go to borrow money for my house, I have to pay even more. So as a customer, as a consumer, I love low interest because I can borrow money. It's like free money. Guys, 5 years ago, 6 years ago, America had like almost 0% interest rate. That means you can borrow money for free. If you borrow 100, you only have to pay back 100. Whenever you want, at your own time. That's beautiful. You can borrow $1,000 and just pay it back 200 here, 200 here, 200 here. You can buy whatever you wanted and just pay it back later with no interest. For customers, that is an amazing, amazing scenario. Now let's go take it to the other side. If you are an investor, which hopefully every single person on this call will be, if you are in my presence, I want you guys to start thinking about investing in your future. Because there's no other option. You're either going to be consumed by debt for the rest of your life, or you'll think about your financial future. Let's think about becoming an investor. If you are an investor, you want the opposite. You want high interest rates. Somebody tell me why, as an investor, you want high interest rates. Anybody on this call? Put in the chat. Why would you want a better interest rate as an investor? All right, Syed says more income. ZZZ says more to get back. Ori says more profit. Better return for your money. Guys, you guys are fucking killing it. All right? That's what I'm talking about. If you have kids around, I'm sorry. I apologize for my language. But I'm serious, guys. This is like everything. Guys, I'm summing up the entire economy. Once you leave this call, you'll understand how economics works. Everything stems from these basic concepts of transactions and debt. Who has the money? Who's borrowing the money? How we pay this back. Okay? If the interest rates are higher, I get more money if I'm an investor. Because if I go to lend you money, I'm going to charge you. I'm going to charge you out the ass. I'm going to charge you a crazy amount. All right. So when you guys see an interest rate for a country is going up, in the Forex market, you guys can see the investors run the Forex market, not the consumers. All right. Now, it kind of plays around. Investors want to be where the consumers are, blah, blah, blah. But if a country is making it very attractive for an investor to come in, then they will just start to throw their money in. This is what Trump is doing. When Trump lowered the tax rate for the rich people in this country, the lower income people in America were very upset because they said, how can the president give a tax cut to the richest when the poorer people in this country need it the most? And they had a point. What they didn't realize is that it made it so attractive to come and invest in America that everyone dropped other currencies and started to throw their money in the American economy, started to throw their money in the stock market. It started to create this huge environment, guys. And so this is something that you guys have to keep in mind. You have to think a little bit creatively, which is, okay, so see Rich Dad, Poor Dad. Dale, my man. Guys, if there's one book that you can read to kind of sum all of this up, read Rich Dad, Poor Dad by Robert Kiyosaki. One of the most insightful books about your personal financial situation. It will show you that there's two types of people in this world, people who are making money and people who are making excuses. The people who are making excuses are generally very educated people, guys. That's what you got to keep in mind. That's the scariest part. You got teachers, people who are underpaid but highly educated. So they know a lot, but they haven't applied this knowledge. All right? Rich Dad, Poor Dad kind of sums all of this up. Guys, let's go back to the main point of this call, which is the fundamentals. That's how everything works. Keep out for the interest rates. If you guys see a number like the unemployment number is changing for a country, okay, I'll show you guys the website that I use. Now it's going to put it in context. Forex Factory. It's a free website for everyone, guys. It shows you all of the news events that are happening every day. And then it puts them right here. An orange means it's medium impact. Red means it's very high impact. High impact means it affects, wait, I don't think I'm sharing my screen. Hold on. All right, there we go. This is Forex Factory, everyone. These orange tabs mean it's medium impact, means it's going to have a moderate impact on the market. This red tab means it's going to have a high impact on the market. Okay? So we look for this, and it tells you everything. If you're not unsure about what PPI means, then you click on this folder. Okay, and it says the change in the price of finished goods and services sold by producers. That's finished goods and services. Let's take cars, for example. Okay, let's say last month cars were $10,000 on average, $10,000. This month they're $11,000. That's cause for alarm, guys. You have to pay. Why are the cars getting more expensive? Oh shit, the price of steel is going up. Okay, so that's because all of these things affect the market, but it'll just tell you it in the most easy form. It's a leading indicator of consumer inflation. When producers charge more for goods and services, the higher costs are usually passed on to the consumer. So if I got to pay more to build my cars, you as the customer have to pay more. All right, and so we track these numbers right here on the side. If the numbers are red, we usually see a drop in the market. If the numbers are green, we usually see a rise in that currency. Okay, so if the dollar is getting stronger, guys, name a pair that's going to get stronger. This is like, any pair that will get stronger if the dollar goes up. Name anything. Just anything. If the US dollar goes up, name a pair that you could possibly buy. UCAD, UCHF, yup. Now name some currencies that you could sell. If the dollar is going up, name some currencies that you guys can sell. There we go. EU, GU, gold. Guys, that's also fundamentals, is because these are cross correlates. If the dollar goes up, Euro USD goes down. If the dollar goes up, gold goes down. Gold is a safe haven commodity. Let me explain a very important term, guys. Safe haven. I use this term on my calls a lot. This is the last thing I'm going to give you guys because I can't give out too much value. We have to get to the members call in a little bit. Safe haven currencies and safe haven commodities. A commodity is something that you can actually trade, like a physical commodity. Safe haven commodities are where people put their money when economies are getting sketchy. So when things are getting uncertain in the Forex world or in the economic world or in the investment world, everyone takes money out of certain parts of their portfolio and they move it somewhere else where it's safer. For example, stocks are very risky. So if you have half your money in stocks, when the economy gets a little worrisome, it starts to get a little recession, you're like, I don't know how I feel about this. You'll take your money out of stocks and put it in something like gold. Because gold doesn't move up and down. I know it seems like it because we trade it on the smaller time frames. But on a day-by-day basis, it's been going up over time. What that means is when people get very scared and they no longer trust money because cash is useless, it just represents how much money that country says it's worth. They stop trusting cash because it gets a little scary. They put it in gold. Okay, that's a lesson, guys, from the rich. If the rich people take their money out of cash and put it into gold and safe havens, then you have to ask yourself, is cash really something worth holding? Is cash in the bank really worth anything? Answer is probably not. The reason rich people have it in index funds, in IRAs, the reason that rich people have it in investment funds, in endowments, is because they at least make a percentage on their money. All right? So this is a little lesson from the rich, guys. Safe haven commodities. When the economy gets very scary, even for you, let's say you have some money in the stock market and you see the recession is coming. You learn from the rich. Learn what the investors do. They take their money out of stocks and they put it into bonds because they're safer. They take their money out of stocks and they put it into cash. Cash is a safe, US dollar is a safe haven. They take it out and they put it into the Japanese yen. That's a safe haven currency because over time it's going to constantly go up. They put it into gold, which is a safe haven commodity, which is going to go up over time. They put it in the Swiss franc, which is one of the largest strongholds with a lot of cash reserves. So if you guys learn the safe haven commodities, you're going to be in good terms to understand that when the market crashes, where to put your money. In Forex, guys, when the stock guys and the derivative guys and the option traders, when they're all losing money and they're pulling their hair out and they're losing all the money they've made in the past 3 years, we can catch the market going down. All right? You can short sell stocks, but you can't, like, that's not how people trade them. When people trade stocks, they either bundle them up into funds, index funds and mutual funds, or they trade them individually. When they trade them individually, guys, if that thing don't go up, they don't make money. But guess what? If an economy crashes for us, we can make money. If the US dollar crashes today, we can make money. Economy goes up, economy goes down. If a recession happens, guys, we'll all probably be rich. That's the beauty, that's the secret about Forex. This is why I joined Forex. I knew that there's an economic downturn coming because I was too young in 2008. I was a kid. But now I know. Now I know the only time for you to make real money in this world is during a recession, a global recession. Because it's like everything is on sale. Houses on sale, stocks on sale, everything on sale. Rich people, they take the cash and buy up everything for cheap. Poor people, they're struggling to find another job because it's a recession. And so this is how things work, guys. If you trade Forex, if the market goes down while everyone else is hurting because they're losing money on their house, they're losing money in their 401k, they're losing money on the economy, you can be making money short selling the US stock market, short selling the US dollar, short selling or buying gold. Does that all make sense, guys? This is a quick tip for you guys because genuinely there is an economic downturn coming. All shit aside, I know we charge for services at ChartAddicts. All shit aside, I want you guys to succeed in this. Because if the economic downturn comes and you guys are panicking, you're going to be in a shitstorm. You're going to get rocked with the waves like everyone did in 2008. If you're prepared and you understand that you can finesse this, then you'll put your head down and succeed. And you'll be one of the only people that succeeds in the market. When fear is the highest, the potential to make money is also high. That's what Warren Buffett said. All right. I hope I didn't take up too much of you guys' time. I hope you guys gained some value. If you guys have any questions, go ahead and find us on Instagram at ChartAddicts. Like ChartAddicts, like we're addicted. ChartAddicts on Instagram. Find us. If you guys want to be on our Telegram calls, join our public channel. That's all free. Aside from our paid service, guys, which we do one-on-one coaching, the main service is public and our YouTube channel is public. We have videos for days. If you guys want to go watch our YouTube videos, go watch and learn something, guys. I hope you guys enjoyed something. Go find someone and teach them something that you learned today. Write this shit down or else it's all going to be forgotten. I love you. Take it easy. Hope you guys enjoyed your week. Peace. Oh, can I drop the chat? Yeah, hold on. Let me drop the link real quick. All right, the chat or the link is now in the chat. This is our public channel. If you guys want to join our paid members chat, just let us know. We do signals, one-on-one coaching, private mentorship. We'll set up a plan for you. We'll set up a trading plan. We'll set up a journal for you. Let's get it, guys. Discipline is key. Hope you guys enjoy the rest of your week. Enjoy your weekend. Peace.